Edition of our Smart Investing weekly stock analysis, where we pick popular stocks that have made the news throughout the week and take a closer look at the fundamentals. And with me, as always, today is Brent Wilsey. But if you like this video here, you find it useful, be sure to hit that subscribe button below so you're notified about our future stock videos as well. Now today, one of the popular ones throughout the week, of course, Facebook. I want to take a closer look at Facebook here and kind of see what the fundamentals look like on it. I guess have a general conversation about Facebook first and kind of where our thoughts lie with this business.
And Chase, I do want to mention to people that we don't look at these numbers beforehand. We kind of like, okay, what are we going to talk about? We chose Facebook today. I'm kind of curious with all the craziness going on Facebook, I'll call it, and the pullback. I'm not looking at Facebook in a while. We could perhaps today say this is a buy. I mean, I really don't know. We don't preview anything. We just do it live for people, the analysis.
Yeah, and I was just kind of curious on that. I mean, just to let our viewers know, is obviously what happened with Facebook is that the whistleblower, so to speak, has come out and has been testifying. I mean, the stock really hasn't done much in terms of its action. I think it looks like Monday, maybe it fell a few percentage points, but it's pretty much flat for the week. So there wasn't really much activity on the news. And I don't know, Facebook's just been one for years that has worried me about regulations because get this, bipartisan, I'm going to say hatred for the business,
But it is very popular with people. I mean, they've got how many billions of people worldwide that do. It's a great business, great concept. They just need a clean house. And again, I don't know the numbers until we do them together. I think Facebook did hit a high of 385 or something. Now it's like 335.
Yeah, it's definitely seen quite a pullback, but it's still done well over the years. And I mean, I do find it interesting, and I even think if the numbers look good, I don't know if I'd like to invest in this business. And it just reminds me a lot of when big communication stocks or when big oil companies went through regulatory periods, it stifles that growth. And it's really hard for businesses to kind of overcome that. And especially now too, Facebook's kind of looking to future prospects or future users. And they're taking a lot of backlash right now from Congress and different people about how it's really shaping, I'm going to say, the morality of kids. And right or wrong, that's just where things kind of stand right now.
That is a fixable thing they can do if they do the right thing. But the thing with Facebook, keep in mind they own Facebook and Instagram. There's no alternatives. I mean, I suppose you can say, yeah, YouTube, maybe
TikTok.
Which one?
TikTok.
Yeah, on TikTok, I still don't know how to work TikTok yet.
I don't either.
It's still not the same thing. That's little videos, but Facebook is where you can say your mind, good or bad.
Yeah.
There's no alternative with that type of reach you can go to yet. And again, we use it in our business. We're on there. We may not like what they say, but
well, you speak about regulation. You say, well, there's no alternative. That's another knocking point for the company, is it's a monopoly. So
that's right.
I just think there's so many regulatory headwinds, and we'll take a closer look at the numbers. But I think to be interested in this company, I think would have to trade around 10 times earnings, because it's just, there's so many, I think, potential things that could really stifle that growth that I would need to see a great value opportunity to get into it, because I still think that the regulatory aspect of it could heavily weigh on the stock here over the next 5 years.
And just real quick on the no competitive companies out there. I mean, what happened with AT&T was they split them up into, I think, the 5 baby bells and AT&T. The investor, the shareholder, actually worked out pretty well for them. The consumer got hurt.
Yeah.
So it's just, you kind of look at this, and again, we're just, if we say the numbers look pretty good, which we still don't know yet, we haven't looked at it, but if we say they look pretty good, you've got to think about all these things. And before we invest in any company in our portfolio, we do 10, 15, 20 hours. This, I think, would be one of those 20-hour ones, because you're really going to understand what is going on, what could happen on the negative side. But I think it's a great business. They've got a lot of eyeballs, and that's very important when it comes to money. So
yeah, I don't know if I want to call it a great business. I think it's a great potential business. I still think that they have too much control, but that is something that kind of concerns me. I think they need to kind of figure out processes, because right now they're that's what's upsetting Republicans is they're kind of censoring different things, but Democrats aren't happy with them because they make too much money.
And I do want to correct that because I don't want people to think I like what they're doing. I don't like what they're doing, but when I say a great business, the business model is a
Yeah.
great business model, but it needs to be done properly. So us look at some numbers. I'm really kind of curious if I'm going to say this is a buy or not.
Yeah, let's take a look here.
All righty. So here we got here. They are in the industry of internet and content information. Not much short on it. Obviously they don't care about the regulations going on. It's only 1.2% as a shares percent float. A lot of institutionals, 80.6% institutional own this. Now looking at the price earnings ratio for the last 12 months, we see it's 24.5. That is better than the industry at 27.7. So good start there. Price of sales, 9.1 versus 9.8, also good. Let's take a look at the price of tangible book value, 7.9 versus 8.1. That is good. And even the price of cash flow, 19.3. That's well below the industry at 32. So the valuation ratio is looking pretty good. Now, we also look at what's called the PIG ratio. That's a PE divided by growth. The lower this number, the better. It shows you're paying less of the future growth. Chase, we got to look at that number, 0.8 versus 1.3. So you're not paying much for the future growth of Facebook currently. Let's take a look at their sales growth. 1 year, the growth is what, 53.5%. Now, this is surprising to me. The industry at 99.9. I don't know who's in the industry, but I'm very happy if I have a company growing their sales at 53% for the 1 year time frame.
And also, too, I do want to point out that's not the sales, it's the earnings rate. For some reason, it's flipped today.
Gosh. It's flipped today.
Yeah.
You're right. Gosh, I'm sorry. I apologize for that. I'm glad you caught that there. Earnings growth for the last 5 years is 39.1 when the industry is 26.5. And Chase, I got to be honest with the listeners here. What happened was I think the old system we used to use at sales versus earnings, they flip-flopped it. So I had to pay close attention here. Now, let's take a look at the sales growth, 32.7% 1 year sales growth. That's well above the industry at 22.9. And the 5 year sales growth for Facebook, 33.5 versus 19.3. And look at the 5 year earnings per share growth estimate there, 28.6 versus 20.6. So even going forward, not affecting, I don't think we'd have to look maybe a month or two ago what it was, but that's still very good 5 year growth rate there. Yeah. They do not pay a dividend. I'm wondering, will Facebook pay a dividend? Because I know they got a lot of cash. They got a lot of cash flow. Maybe that's something that they will establish going down the road as a dividend. Let's see how strong they are cash wise by looking at the balance sheet. Current ratio of 5.4 versus 3.1. That's a very good number. It tells you have about 5 times the current liabilities that you could pay for with the current assets. A big number there. Not much debt to equity. It's 0.1 versus 0.2. These are usually low debt companies. And look at that net profit margin, 37.2 versus 27.5. Means for every dollar that they bring in, wow, they keep 37 cents. I like that kind of number. Return on equity also good for Facebook, 28.2 versus 25.5. I'm liking what I'm saying, but you're the guy that's going to tell us about the numbers and the earnings going forward. So I'm going to sit back and listen to what you got to say here, Chase.
Yeah, well, to start here, let's take a look at the current price, $330.05. It has fallen from that 52-week high. So I guess maybe I'm somewhat mistaken in that maybe these regulatory concerns are weighing on it, but I still think not to the effect of, if it wasn't a tech darling, I think it'd be having more problems because it did fall from a 52-week high of $384.33. Looking at the 52-week low, though, $244.61 has still risen from that level. It's a year to date up about 20.8%. It's market cap. We know it's a very, very large company, not at that $1 trillion level anymore. It looks like, gosh, my screen is blocking it. There we go. $930 billion, that current market cap for Facebook. Now, as you mentioned, we want to take a look at what is this company looking like going forward. And we're going to look out to December 2022. I see that the average estimate for earnings per share here from 33 different analysts actually is $15.96. And what we do is we use a 16.6 multiple on that estimated earnings. Gives us a target sell price of $264.94. So you can see here, it's trading at a forward PE of about 21 times estimated earnings. It's still just expensive based off of the valuations of it. I still don't think I'd be ready to invest on it at these levels, given some of the concerns I mentioned before.
Yeah, I thought maybe we see something better, that the earnings are up higher, but the stock still needs to fall more, which it could. I mean, there's a lot of negativity on that stock, and that's what we like to find is great. Again, I have a hard time. I don't want to call them a great company because of what they're going through, but a great potential company,
Yeah.
because they have a lot of potential. A lot of people go to Facebook and Instagram. That's a lot of advertising you can do, but they have to fix the problem. Now, I would like to see the stock probably fall down to maybe 200 or so
Yeah.
current levels. And the earnings would have to go up. I did see, I don't know if you still have it up there or not, but the earnings for the next year for 2023 actually looked a little bit better. So we'll see what happens.
Yeah, I mean that comes from the company still estimated to grow. So, I mean it's still I'm going to say more of a growth company, but it doesn't trade as at the same valuations as Tesla or gosh, even Apple or Microsoft or Google for that matter. I mean, I'm going to say Facebook's the best valued big tech company in terms of its valuation ratios, I believe. And I didn't look at the numbers, but just kind of based off what we saw, I know Apple and Microsoft, they're trading around 30 times future earnings. So Facebook a little bit more appealing in that regard, but I know they're going through more issues than those other big tech companies.
And you can help me out on this one here because you're the younger guy, and I know that they also have, I think it's called WhatsApp. Is that theirs as well? And
Yeah,
then
what's that? I don't know.
okay, you don't know anything. We know the name. I
I,
don't know how they monetize it. And then also too the glasses, the reality
oh,
Ocula,
Oculus, yeah, they have that.
Oculus. Yeah, that could
I
be
still don't see how that ties into their business model, but maybe longer term they have some visions with that. I know they have the portal. I don't think that was a big hit. That was supposed to be like a
Here's one for you. I forget what they called it, but remember what do they call it? Facebook digital currency. Remember what they came out with that? That was kind of
oh yeah, it was Libra or something, wasn't
yeah,
it? I don't know. I thought that was still maybe in the works somewhere. I don't know, but
could
it
be,
is
but
something that I think definitely died down. It hasn't really been as adopted as I think they originally hoped. So I don't know. I mean, the valuations are high, the potential growth is there, but also too, the thing is that potential growth could be stymied if regulation comes in. That I think a lot of these analysts are very high on what could happen with Facebook. So that's the thing is projections going forward. I think the projections may be too high depending on what happens with the regulatory side.
maybe Mark Zuckerberg's not at Facebook down the road too. I mean, I remember a time when Steve Jobs got kind of had to leave, so to speak. So who knows what can happen? That's why we watch the numbers. That's why we don't get excited, emotionally excited about these things. We look at these businesses. We'll be watching from the sidelines what's going on, but there could be an opportunity with a little bit better management and house, we'll call it, that Facebook could be a good business to invest in for the long term.
Yeah, absolutely. So right now, I'd say sit tight. You may miss it, may go higher, but definitely still not a value company in terms of the true valuation ratios here. So yeah, we're going to sit tight on this one and still not invest in Facebook at these levels. So with that, thank you for joining us today. If you like the content, please be sure to subscribe to our YouTube channel for upcoming stock videos. Again, we do this once a week, so you might find some great tips here over the coming weeks. This should not be used as investment advice. Those is for informational purposes only. If you're interested in learning more about our investment philosophy and how we manage money for our clients at Will C Asset Management, go to our website, smartinvesting2000.com. Again, that's smartinvesting2000.com.